Welcome back for the holiday weekend and get ready to trade this volatile market. This is your morning jolt. And yeah, I know you can care less about emerging market stocks. You've never even been to an emerging market. You probably don't even know any of the emerging market indexes, but you need to start paying attention to this stuff because in many respects, emerging markets are often, in terms of predictive power, right in line with the Dow Transports. And I know you know what that is. And with emerging markets right now, we're seeing steep sell-offs again. I'm gonna just read off of some of these stats. The MSCI Emerging Market Index down 1.7% today, lowest in 3 weeks. You have the MSCI Asia Pacific Index down 1.4%. It's the lowest level in 3 weeks. You need to care about this stuff. Why these emerging markets selling off again, despite being routed for the most part throughout the whole year? You have trade war fears, but I think it's really a focus of the strengthening dollar. Emerging markets historically do not perform well when the dollar strengthens. Why is the dollar strengthening? Well, because your Federal Reserve is raising rates, in my humble opinion, and that's what the market is positioning for. So start caring about emerging markets, research them, look at them, and more importantly, tune to TheStreet, because we're going to be talking about this all day. Watch emerging markets. Next up, Tech Talk. You know, I joked on Twitter last night at Brian Sazi that when Amazon hit $1 trillion valuation, I was calculating when they would reach $5 trillion. Obviously, yeah, I was kind of mapping it out. It could happen maybe in our lifetime. You never know. Crazy things have happened. But if you look at, I was looking over there, a note from Miller Tapeback strategist Matt Malley, who I follow all the time. He points out right now Amazon shares up 70% year to date are in extreme overbought territory. What does that mean? If you have no clue about the technicals, you probably may not want to buy the stock here because this could be due for a correction. Yes, mighty Amazon could be due for a correction within days, definitely within a couple weeks as investors rotate out of this hot stock and look just for other plays into year end. Ultimately, you'll probably see the stock pop during the holiday season because they're going to decimate more retailers. You'll see more store closures going into early next year because of the pure dominance of Amazon. Get at me, Amazon PR. I'm sure I'll hear about you via email like we always do. All right, next up around the street, big day for us. I'm talking to Sprouts CEO at the NASDAQ this morning, so we'll have an interview with him hitting very shortly in the day, hopefully before noon. That's going to be interesting. You know, the stock has really come on late after the second quarter, and despite the strong quarters from Walmart, Target, and Amazon, Sprouts is doing pretty good, so I'm looking forward to talking to them. I've never been to a location, but they have over 300 stores. If you have, get at me on Twitter. I got to know what you think about the experience. Apparently, 15% of their floor space is devoted to fresh fruits and veggies, which is something I could certainly get behind. And then lastly, Jacob Sonnenschein, he's going to be on camera with Dunkin Donuts execs in New York City, talking about their new store concept, which opens. Yes, these are the stores just called Dunkin', not Dunkin Donuts, Dunkin', and they have taps in there for your cold brew coffee. Why? Because the millennials are speaking. They do not like ice in their coffee. I'm just relaying the message. I'm on the outskirts of being a millennial, and that is your morning jolt. Sign up for the free newsletter down below and hang in there. It's going to be volatile into the end of the week. Oh yeah, free newsletter down below. I'll see you guys later.